What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Guys, if you want to be a part of my financial community on Patreon, it's called the Wealth Builders. All you got to do is get down to that first link in the description box. Click on that Wealth Builders Financial Community link. It'll take you over to Patreon. All you got to do then, once you get to Patreon, is sign up, man. Sign up and come join the fastest growing financial community on Patreon. All we do in that community is help one another build wealth, man. None of us are experts. We don't try to tell you what to do. We're just regular people trying to get to that pot of gold at the end of the rainbow. And in that community, we share best practices, tips, nuggets, what's working, what's not working. And we just provide a safe haven for like-minded people that want to build wealth. So certainly if you want to be a part of our community, like I said, get yourself down in the description box, first link, and sign yourself up for the Wealth Builders. We'd love to have you. Webull is offering a cash back reward, cash bonus reward. That's what they call it, a cash bonus reward for anybody that opens up a new Webull brokerage account. You put a certain amount of money in your new Webull brokerage account, you can qualify for a cash bonus. Now they got 4 or 5 different options on the cash bonus. So get yourself down to the description box, second link, and click on that second link in the description box, and you'll get all the details on that Webull cash bonus reward that they're giving out to folks that decide to open up a new Webull brokerage account. Well, appreciate y'all for rocking with me today, man. Let's go ahead and dive into the topic at hand. And the topic at hand today is whether the stock market is a total scam. So I'm sitting here listening to one of my, favorite podcasts. And one of the guys on the podcast was talking about the stock market. And he was saying he believed that the stock market was a Ponzi scheme and a kind of a scam because of what's currently happening with corporations. So of course, you know me, 30 years in the stock market, investing, building wealth. I said, well, let me hear what he has to say. And then I'll make my own decision on whether I believe the direction he's going or not. So he started out by saying, these corporations over the last, couple of decades or so have been buying back their stock. And one of the reasons he believes that the stock market right now is operating at all-time highs is because of these corporations artificially inflating the stock prices, right, through these stock repurchases or stock buybacks. See, here's how the thing works is, when these companies, they have so many shares of stock out there for people to buy. But when they buy their own stock back and bring it back in-house, that increases the stock price. Because why? They own more of the shares than are out there. So I said, man, is that the only reason the stock market is, hitting all-time highs because of these stock repurchases? So I said, let me go out here online and do me a little snooping around and do me a little bit of research to see if what this guy is saying on this podcast, is the truth. I want to go out on my own and double check this. So I went out and I found an article. Matter of fact, I found a couple of different articles, but I found one, and one of them I found, here's the headline: Are stock buybacks a good thing or not? So I said, okay, let me take a look at it. And this has come from Investopedia, which I've researched stuff on Investopedia before. So, I kind of like what they do over there. So let me walk y'all through what they say when it comes to companies or corporations buying stock back. Another thing he mentioned on that podcast, before I get into this article, another thing he mentioned was these CEOs and these executives of these large companies, these publicly traded companies, their overall compensation package is tied to the stock price. The better the stock price does, the more they're compensated. Now, there was a law some time ago that came out saying that these CEOs of these public companies could only make a certain amount of like base salary. I think it's up to like $1 million. Boom, they cut them off. But the remainder of their compensation is through like stock options and things like that, which is tied to what? The stock price. The better the stock price does, the more compensation they get above and beyond what their base salary is. So he's saying that these CEOs and these executives, right, they benefit from the buying back stock, right? The repurchasing of the company's stock. They benefit from that. But he also said who actually does not benefit in a lot of cases is, shareholders, because dividends. See, when these companies have all this cash, they got a couple things they can do with it, right? One of the things they can do is buy stock back. Another thing they can do with it is pay dividends. So he's saying, the guy on the podcast was saying, these CEOs rather repurchase the stock back so that they can increase the stock price. Therefore, they're compensated more, as opposed to taking profits and, increasing the dividend and passing that on to shareholders. A lot of them are opting to just repurchase the stock buyback, so that they can increase their overall compensation. So I thought that was pretty interesting. So here's the article, one of the articles that I ran across that I thought could help shed some light on this thing. Large companies flush with cash have been increasingly repurchasing their own stock over the last couple of decades. In fact, the value share repurchases by S&P 500 companies has exceeded those companies' total dividends every year since 1997. See where I'm going? So what the guy was saying on the podcast is starting to make sense. Even in this article right here, they're saying S&P 500 companies have exceeded those companies' total dividends every year since 1997. So what they're telling you is they're repurchasing more stock than they're paying out in dividends. So who's winning, right? And so I thought that was interesting. Here we go. Some view the rise of buybacks as undesirable, saying they are short-sighted and often done for questionable reasons. Others argue they benefit both the company and investors. Beyond the financial world, regulators and lawmakers have noticed the rise of stock buybacks and have called for reforms that push companies to use their profits in other ways. So what's happening is, since the pandemic, right? Matter of fact, it was before the pandemic. You can go all the way back to 2008, the great financial crisis, when obviously the government stepped in and bailed out all these major banks, right? And all these in Wall Street, basically stepped in and bailed out Wall Street to the tune of trillions and trillions and trillions of dollars. What did? They just turned on the money printer and started printing money in the tunes of trillions and trillions of dollars, and all these sweetheart deals and all this stuff. So what happened back in 2008, and I'm learning all this from this guy on this podcast and just doing my own research. So back in 2008, great financial crisis, when the government stepped in and turned on the money printer and bailed out all these Wall Street banks and financial companies to the tunes of trillions and trillions of dollars. What they did with that money was They invested it. They hoarded it, right? And then what happened was interest rates basically get cut down to zero. You get all this free money from the government. Interest rates get cut down to zero. Market starts to recover. But what happens though? That money, they still have it. Same thing with corporations, right? Corporations did the same thing. Corporations during 2008, great financial crisis, they benefited from trillions and trillions and trillions of dollars of bailout money from the government. And what did corporations do? They took that money and they did what with it? They invested it. But they took all these trillions of dollars from us taxpayers, but what did they do to the prices of our goods and services? They increased them. So they took all of this free money from the government back in 2008. They kept that free money on the balance sheet. They started investing that free money and started getting a return on that investment. All along, they started increasing prices of goods and services to us. So they basically double whammied us. They got trillions and trillions of dollars in bailout money. I'm talking about Wall Street. I'm talking about banks. I'm talking about big Fortune 500 companies. All got bailouts back in 2008. And a lot of those companies just sat on that cash. And when times started getting better, what did they do? They increased prices and continued to double down on making profit on us because we bought their goods and services. So now you fast forward to what? 2020, same thing happens during the pandemic. Once again, government steps in, turns on the money printer, starts printing all this free money. Who gets all the free money? Think about it. Who got the free money? Businesses, Wall Street. What did they give you and me? A $1,200 stimulus check. That's all you got. You get a $1,200 stimulus check, but what you didn't realize was inflation was coming. So not only did they crush us with the free money that they got from the government, which we paid for it because it's not really free money. Taxpayers pay for it, right? So not only did the taxpayers bail out corporations and Wall Street in 2008, we also bailed them out again in 2020. And all we got for it in 2020 was a $1,200 stimulus check. Maybe you got two of them. But what you didn't realize was we had to pay for the bailouts. How did we pay for the bailouts? Inflation. That's how we had to pay for the bailouts. So the bailouts that we gave in 2020, we paid for those bailouts through inflation. See, when you put all this free money into the market, into our economy, at some point you got to start taking that money back out. And that's what the Fed did. The Federal Reserve started taking that free money back out of the economy by increasing interest rates to fight inflation. So on two occasions that I can remember, government has bailed out these companies. What does that make today? So what's happening right now is all of these companies since 2020, matter of fact, since 2008, been having record years in profits. Record profits. That's why this year alone, go look at the Magnificent Seven and see record profits from all the Magnificent Seven. That's just a small sample, right? If you look at the S&P 500 companies that have reported their Q1 earnings, it's like 80% of them beat expectations. Those are record profits, guys. What are they doing with those record profits? They're sitting them on the balance sheet, and now they're starting to use those profits to buy back what? Their stock. Number one, they do it so that the CEOs can be compensated higher. Remember, I told you there's a law out there that says that they can only be compensated like salary-wise up to like $1 million. But they make the bulk of their money, guys, through stock options. And those stock options are tied to the stock price. The higher that stock price goes, the more compensated they are with stock options. That's why you see a lot of these CEOs, you see them doing what? Selling stock. Now, they have to go ahead and ahead of time give that to the SEC. They have a schedule that they have to give the SEC that documents when they're going to take stock. But if you're artificially pumping up your stock price because you're buying back shares of the stock, you know the stock price is going to go up. So this guy is saying that's why you see an all-time highs, but it's artificial, right? So here we go. Beyond the financial world, regulators and lawmakers have noticed the rise of stock buybacks and have called for reforms that would push companies to use their profits in other ways. In 2023, companies had to start paying 1% excess tax on share repurchases, and the U.S. Securities and Exchange Commission, the SEC, has been working to expand transparency rules to force companies to divulge how much they engage share buybacks. But here's what you got to understand, guys. With deregulation coming, which it is, remember that's one of the mandates that President Trump ran on was what? Deregulation. So when you deregulate companies, these big companies, they don't have to be as transparent anymore. This is what deregulation is. They don't have to be as transparent. They can do all kind of shady stuff to manipulate the stock market, to manipulate their stock price. That's deregulation. So you guys got to understand that's coming, right? That's part of the big, beautiful bill. That's coming. That deregulation is coming, man. So be on the lookout for that. Of course, you understand the SEC and all these government entities, they're subject to whatever President Trump wants to do. They're subject to him, right? So he gets to make the last call on that. And he's already went on record and said he's going to deregulate. So here we go. So are buybacks good or bad for investors? Are there knock-on efforts that are bad for the wider public? We'll address the pros and cons below, right? So here we go. Pros and cons. Let's go ahead and take a look at this right here. Like a dividend, a stock buyback is a way to return capital to shareholders, while a dividend is effectively cash payout to shareholders based on the value of their shares. With stock buyback, shareholders can sell their shares back to the company, usually at a premium price. Those shares are pulled out of circulation and taken off the market until they are reissued or dissolved. This effectively increases the value of shares still on the market. Stock buyback history. The SEC didn't allow stock buybacks until 1982. That's when it issued Rule 10b-18, which provided a safe harbor allowing them under specific conditions. Timing. Companies must use a single broker or dealer for all buybacks within a trading session. Also, buybacks are not allowed within 30 minutes of the beginning or end of the trading day if the company's value is above 150 million. Otherwise, it's 10 minutes. Prices. The prices paid for the shares must not exceed the highest independent bid or the last independent transaction price quoted when the purchase is made. This is to prevent companies from driving up the stock price artificially. Volume. The number of shares brought back in any single day must not exceed 25% of the stock's average daily trading volume over the previous 4 weeks. Over time, dividends have become a smaller part of the picture for investors. In the 1980s, the dividend yield for the S&P was typically between 3.5% and 5.5%. In recent years, it's been under 2%. Companies have paid out more in stock options than dividends over the past couple of decades. That's important to understand, guys. Stock options are being paid out to highly compensated executives more so than dividends are being paid out. That's one of the reasons why a lot of people are saying stock market is a scam. You got big corporations who are doing what? Manipulating the stock price because they're buying the stock back, which in turn increases the share price because you got fewer shares owned by somebody else. In some cases, they even dissolve some of the shares, right? Fewer shares do what? Increase the price. More demand, fewer shares, right? That whole supply versus demand thing. So I thought that was pretty interesting, man. Buybacks versus dividends. Let's take a look at this one. Buybacks and dividends distribute excess cash and compensate shareholders. Given a choice, many investors would choose a dividend over higher value stock. Some rely on regular payouts that dividends provide. So here's the thing. A lot of people build their wealth and they put that wealth into something that will pay them income on a monthly basis. Or a quarterly basis. That's what the dividend does. So a regular investor like you and me, at some point may say, hey, I want the dividend. I don't want just the cash. I don't want to sell my stock and then the cash just sits in my savings account or my money market and I earn nothing on it. I'd rather keep my money in the stock and get the dividend. But as you've already heard me read, stock option payouts are larger in most cases than dividend payouts. Just saying, man, you got to start thinking about this, what's really happening here. However, companies might be weary of establishing a dividend program. Once shareholders get used to payouts, it's difficult to discontinue or reduce them, even when that's best for the company. Decreases in dividend can lead to stock slide. That said, the majority of profitable companies do pay dividends. Buybacks benefit all shareholders to the extent that when stock is repurchased, shareholders get market value plus a premium from the company. If the stock price rises before the repurchase, those selling their shares in the open market will see a tangible benefit. The company buying back stock also has flexibility, unlike dividends, which are paid at fixed times. They can relay or change a stock buyback program should circumstances call for it. Pretty interesting stuff, man. At least for me, it was. So quick pros, quick cons. Pros is this. Pros of cons of stock buybacks. Here are the pros. Increases earnings per share, EPS, by reducing outstanding shares. Increases stock price. Boost short-term stock price benefiting shareholders. Increase in stock price. Provides a tax-efficient way to return cash to shareholders compared to dividends. Demonstrates confidence in the company's prospects. Helps offset dilution from employee stock options and equity grants. Here are the cons. May signal a lack of productive investment prospects. Can divert funds from research and development, capital expenditures, and acquisitions. Here's another con. Sometimes viewed as a form of market manipulation. That's what the guy was saying in the podcast that I listened to. Market manipulation, right? May prioritize short-term gains over long-term growth. Could lead to excessive leverage if funded by debt. So there you go, man. Drop me some comments down in the comments and let me know, guys, what you think. Do you think that's really happening? That the stock market is only hitting its all-time highs due to stock market manipulation by your major companies through stock buybacks, which in turn take fewer shares out of circulation back into the company, which in turn increases the stock price. A lot of people saying that's the only reason the stock price is at all-time highs right now, the stock market, is because of this manipulation. Here's my little 2 cents. I think the stock market is going to be manipulated one way or the other. Manipulating the stock market is part of it, guys. I've been doing this for 30 years in the stock market, buying through dollar cost averaging every single month into big boy blue chips. And what I found is, as a long-term investor, although there's manipulation in the stock market, it still goes up. So if I'm a long-term guy and I'm willing to be patient, yes, will manipulation happen? Will corrections happen? Will consolidations happen? Yes. But if I'm long-term in this thing, long-term tells me, or history tells me, it goes up. So even through the manipulation, I'm still making more money. Now, don't get me wrong. It's going to be manipulated, but real estate is manipulated, right? Real estate is manipulated. Gold, silver, all precious metals are manipulated. Crypto is manipulated. Any asset class out there, guys, is subject to manipulation. It is. All of them are subject to manipulation. So the stock market is no exception, right? It's no exception. Now, what you got to understand is, if it is true that the only reason the stock market is doing as well as it's doing is because of stock buybacks of these major companies that are propping up the stock market and propping up their stock prices. If that's true, what could cause this thing to all come tumbling down? That's what you got to want to ask yourself and try to figure out as well. What could cause this thing to continue to fall down? This is why I tell you guys, I don't have the answer to that, but this is why I tell you guys it's important that, at least for me, it's important that I'm not the expert. It's important for me not to have all my money in individual stocks, because if I got all my money in individual stocks, I got to be the expert. I'd rather have the majority of my money being invested through ETFs, because now I got Vanguard, BlackRock, Charles Schwab, Fidelity, State Street, etc. I got these big old gigantic firms who already know what's going on. They see the manipulation. They can move and change things and do different things to avoid the manipulation. And it's a proven fact that ETFs actually go down slower in a downturn per share than individual stocks in a lot of cases. Individual stocks will go down faster per share in a downturn or a consolidation or a correction. They go down faster than an ETF. Why? Because ETF inherently has diversification inside of the ETF. Why? Because it's not just one company. It's a group of companies. And sometimes in every sector, every industry, like the S&P. So you got 500 companies in the S&P, but they're across all industries. So even if the tech industry gets hit, you got 10 or 11 other industries in there that may be prospering. That's why, in my opinion, these ETFs, whether they track a sector or whether they track an index, is always a good idea for Richard Fain to keep the bulk of his money there, right? Because I got diversification. Although I'm 100% in equities, it's diversified because it has groups of companies instead of one company. But if I got all of my eggs concentrated just in the Magnificent Seven and all of them are tied to tech or artificial intelligence and something happens, now I'm stuck like Chuck because I'm isolated, I'm consolidated, I'm concentrated in one industry. So I personally, you may do whatever you feel like you need to do, but me personally, I'd rather keep my money diversified. I'm gonna be all in equities for the next 9 years. I'm gonna be in all equities, but I'm gonna be in ETFs, right? I'm gonna be in ETFs that track a sector or that track an index. And then I'm gonna be about 20% in individual stocks, 80% in ETFs. So just in case something does happen with this market manipulation, and I do believe it's been manipulated, and I've told you guys that before, the stock market is manipulated. It is, but so is real estate. So is precious metals. So is crypto. All of that stuff is manipulated by the 1%, all of it. And of course, companies are going to buy back their own stock because CEOs are compensated that way. They're compensated by the increase in the stock price. Their compensation is tied to the stock price. And at the end of the day, these CEOs and these highly compensated individuals and these insiders are going to look out for their best interests first. The rest of us later. If it's down between them being compensated or us being compensated, who do you think they're going to compensate first? Them. That's the reason why you see what? You see stock options, exercising stock options at a higher level than dividend payouts. I just read you that in this article. That's why you see that. So just understand that although, yeah, there is a Ponzi scheme type of, you know, tint to this whole thing. You know, I won't go as far as the Ponzi scheme, but will I go, there's some manipulation? Yes. Yes, definitely manipulation. I won't go as far as Ponzi scheme, but I will say manipulation. Absolutely, because you can see it every day. You can see this manipulation every day, right? And also you got to understand in the stock market now, you got this robo investing, or you got this automated investing by these big old companies, these billionaires. They have this automated system of investing. And a lot of times what they do is pre-market, they load up these orders. They load up these orders, right? And in some instances, not always, but they load up these orders. And then when the market opens, these orders are like executed or sometimes canceled in seconds. So what happens is they load up these orders, and then when the market opens, they turn around and cancel them. But by that time, the price shoots up, but they're canceled. Then you all of a sudden you see it coming down. That's all automated. The first 30 minutes that the market is open is the most volatile. And then the last 30 minutes or the last 15 minutes that the market is getting ready to close, I'm talking about normal hours, is the second most volatile time. So all I'm telling you, man, is I believe personally for Richard Fain, the stock market is a great way to build wealth, but you also got to understand how to protect yourself if you're going to participate in the stock market. The way I protect myself is the majority of the money I invest is invested through ETFs where they're the expert and they understand. So you also got to understand out there they got these dark pools that you and I don't participate in. They're dark pools. And basically they're behind the scenes where these big old gigantic hedge funds and these institutional investors and all these billionaires in some instances are trading gigantic blocks of stocks or whatever behind the scenes. And they do that so that it doesn't hit the normal market. They're called dark pools. They exist. Again, guys, I'm not trying to be some expert here. I'm just trying to give you some things to think about and go out and do your own research to try to figure out what's going on. That's why I heavily encourage the folks on the Wealth Builders Financial Community on Patreon. I heavily encourage them to consider, ETFs. But at the end of the day, it's their wealth building. They get to do whatever they want to do because I'm not an expert. I'm not trying to tell them what to do. I'm just saying, if you're trying to kind of protect yourself from having all your eggs subject to just individual stock basket where manipulation is very easy. Y'all have seen how manipulation works. Just think about Liberation Day, where you saw what happened with a lot of these stocks, a lot of these big companies like Nvidia. Nvidia goes down to $86 a share. And now all of a sudden they're at $160 a share. 3 months. Okay, 4 months. What? May, June, July. Yeah, 3 months. So how do you go from $86 a share 3 months to $160? See this what I'm saying? So all I'm telling you is protect yourself. If you're going to get into this paper asset thing, protect yourself. Do you some homework. Figure out how to avoid this manipulation that's going on, because it is going on, right? So here's the headline. S&P 500 is little changed as investors look to recover from Monday's tariff shock. All right? Investors tried to recover from a steep Monday sell-off after President Donald Trump pushed the tariff deadline once again and signaled flexibility on that timing as well, with countries willing to negotiate. The S&P 500 traded just below the flat line. While the NASDAQ was unchanged, the Dow slipped 116 points. Trump late Monday said the new August 1 tariff deadline is not 100% firm, adding that if they call up and they say something a different way, we're going to be open to that. So what did I tell y'all yesterday? I told y'all yesterday, President Trump is using these tariffs as a negotiating tool. And from the beginning, that's all it's been. a negotiating tool to bring these countries back to the table, either to bend the knee or, like he said, bring in more revenue from tariffs. Now, whether you like that or not, that's on you. You figure that out. I ain't got nothing to do with that. But my opinion is this. The market is starting to realize, and I'm talking about investors, they're starting to realize this thing ain't all what they thought it would be, right? We continue to kick the can down the road when it comes to a hard deadline on tariffs. Now we're saying August 1st. But probably what will happen is we'll kick that can down the road again, and then we'll say September 1st. We'll just keep kicking the can down the road. I told you guys as well, I believe for the next 3.5 years, while President Trump is in office, over the next 3.5 years, we'll continue to have this tariff discussion. It will be a part of the everyday financial markets, the everyday economy, this whole tariff thing. I believe that. You don't have to, but I do. So how do you move and try to still get to where you need to get to, even though this is always looming? Well, I think the investors have just decided to push it aside and keep doubling down, right? And a reason investors are doubling down on the stock market is they have nowhere else to put their money. Where else are they going to put it? If I'm an investor and I'm trying to make sure I get out of 2025 in the green, where else am I going to put my money? Stock market. That's where you're going to put it. So your top 10% of, people in this country who have money, they control 90% of the stock market volume. So those 10% are doubling down. People like you and me, we should see that and move accordingly. Personally, not for you, but for me, that's why I double down. I keep doubling down because they're doubling down. I told you guys on this channel a long time ago, I follow the 1%. They will lead me to that rainbow, that pot of gold at the end of the rainbow. The 1% will. I just do what they do. If they continue buying and doubling down and running this thing up to all-time highs, I'm going to do the same thing. Now that they have realized that the tariff discussion is just a negotiating tool, I mean, you just heard right here. I just read to you what President Trump said. He said right here, let me read it to you again. This just goes to show you what's happening. Trump, late Monday, said the new August 1 tariff deadline is not 100% firm. What is the President of the United States telling you right there? He's telling you it's subject to change. I can move it out further if I want to. If countries come to me and have a real serious conversation about these tariffs, we're going to negotiate. So that tells the stock market, not the stock market, but investors that double down, man. Just keep doubling down. Right? And that's what investors are doing. They're just continuing to double down. That's why you got these all-time highs coupled with companies, big old gigantic companies are repurchasing their stock. A lot of them are, which is in turn doing what? Increasing the stock price, AKA all-time highs. Because a lot of people are thinking, well, why could we be at all-time highs when you got the threat of the tariffs? You got the threat of the labor market weakening. Well, the labor market, according to the last jobs report for June, ain't weakening. It added 147,000 jobs. Now, a lot of people saying, oh, that's funny math. That math is funny. I don't know if it's funny or not, but that's the report. And the market rallied on it. I don't know if it's fair or not, but the market believed it because it rallied. Right? Now, next week, on July 15, you're going to get the CPI inflation report for June. And let me tell y'all something, guys. If that CPI report for June comes in better than expected, and it doesn't show that these tariffs are increasing inflation, look out for the stock market. It's going to push higher, in my opinion. That's next week, though. Because, see, what we've been hearing is from the people on the side of the tariffs are bad, this is going to destroy the country, all that stuff. You ain't seen it yet in the numbers. A lot of people said we would see it in June, July, and August, but now guess what? President Trump keep kicking the can down the road, so you may not even see it this summer. You may not even see it this summer. So we'll have to see next week. That's going to be an indicator, in my opinion, of what's to come. So just wanted to share with you guys my little 2 cents, man. You guys go out and do your own homework and figure that out for yourself. I'm just here, guys, giving you my opinion, and it's just my opinion. You go out and do your own homework, come up with your own conclusion, and that way you can critically think through it and come up with a game plan. I know what my game plan is. I'm just going to follow the 1%. Whatever they do, I'm going to do. They double down, I'm doubling down. When they get ready to get out, then I get out. But until they get out, as long as I think at all-time highs and they keep doubling down, I'm going to keep doubling down right with them because they know something I don't know. So I'm just going to follow them. I'm going to follow the 1% and run this thing how they want to run it. And when it's time to consolidate and correct, pull my stuff out, wait till it consolidate and correct, and then I get back in again. That's the game plan for me. So figure out you a game plan so that you can survive this thing, because there is manipulation and some shenanigans, some stuff going on behind the scenes that you and I can't see. Just like I told you about them dark pools. Them dark pools exist. Go out on Google and research dark pools. You'll see what I'm talking about. Well, like I said, man, if y'all want to join the Wealth Builders Financial Community on Patreon, you know what to do. Get yourself down to that first link in the description box and click on that Wealth Builders Financial Community Patreon link. It'll take you over to Patreon. Sign up for the Wealth Builders. Come be a part of our team. We'd love to have you. Hey, man, Webull is giving you guys a cash bonus reward for anybody that opens up a new Webull brokerage account. Now, you do got to put money in your new brokerage account, and they got 4 or 5 different options. Click on that second link. It'll tell you all the options. So whatever amount of money you put in, there's probably an option there for you. So check it out. If you're interested in that, I wouldn't pass it up, but it ain't up to me. It's up to you. Check it out, though. Second link down in the description box. If you stop by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Never, 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 never stop chasing your greatness. Man, I tell you what, guys, stay healthy, get wealthy, and I'll catch you guys on the next one. Peace.